All right, here we go. We're live. What's up, guys? Got a quick audio and video check. In the bottom left screen, you should see my beautiful face, and Max's even more beautiful face somewhere to the side.
We saying,
and you
Legends?
should see Max's chart.
Legends, welcome wherever you are in the world. We are going to do one of the fucking most epic streams of all time. We are dumping right now. You can see on the Bitcoin chart on my screen, we are literally dumping. My previous video was me saying if we can't get above the micro high, we are going to very likely struggle. You know, it's a lower high, lower highs, lower lows, downtrend. So I think the probability right now, guys, we're looking at 20K for a retest, but we'll get into that, Shizm and Izza. Bad audio. I don't know. Is my audio okay, Legends? Just tell us in the chat. But we're literally dumping right now. You can see on my chart, this is actually happening. I said this level here, if we can't get above it, you can see we actually had a failure here. I took the long from 20K twice. That's 2 trades you could have taken there. I took the first one at 4.5% around. But now, guys, we have a lower high here. We couldn't get above it. So we're probably going to be doing some shit down to maybe one more like that. And actually, potentially could get something like that for a descending formation. So that's what we're going to talk about anyway, but I'm rattling into the charts real quick. Is the audio good? Sounds good to me. I think it might be your side, Sammy. Say something on.
No, it's all good. I think we're totally fine. If I get I'm watching my comment. I think this is actually merging our comments. So guys, let's give some context on what's actually fucking going on. Max and I are streaming from one source to both of our YouTube channels, which means that Max has the ability, as do I, to each off screen.
We can change the charts like that.
There you go. It's just that's Max's screen, and both of us zoomed in, and yeah, we're my audio not good. Oh, that came over there for me, isn't it?
I'm not gonna lie. On your side, it is a little bit choppy over there, my guy, Sammy Law. You look like you're mid-ocean right now. You're in the sea. It's choppy. You're getting carved up by the elements. It's a little bit laggy and bad.
It's a bear market, mate. It's
the bear market times, bro. Legends,
I don't have the upgraded Wi-Fi packages out here, mate.
You know what, Legends? This is what happens when you hit a savage bear market. You get the screen looking like Sammy Laws. It's still a beautiful face, but even at 8-bit quality, you still look absolutely profoundly beautiful. But I would like to see you in 1080p, my friend. I'd like to see you in 1080.
I'd like to see myself in 1080p, but I don't know if getting it. Like, I'm wondering if let's forget about my camera. I don't really care about that. But if I share my screen, can you see my chart perfectly fine? I'm good moving around. Here's me drawing.
I can see the chart. I can see your chart. Yeah.
Is it like high def? Can you read the numbers over here on the side? Can you read the current price right here?
It's on my end. I don't know in the chat. In my end, it looks really fucking slow and a little bit blurred. But I can see the levels. I can see the charts. It just looks very, very bad. The internet speed. Stop your camera, Sammy.
Okay, well, it's going to look very awkward on the play because it will be your camera on my live stream, so I'm not going to do that. We can both turn our cameras off. But
nah, just go. Let's just talk charts. It doesn't matter. This is the first live stream we're going to do anyway, guys. This is going to be the first of many. Sammy is one of my favorite crypto guys in terms of actually good, honest, technical analysis in trading. No bullshit. So we're going to be doing this more often anyway. Probably once a week, getting this analysis out. I'm not drinking at the minute. I'm back on the chart. So I feel like this is to be the first of many, and a little bit of an internet connection ain't gonna stop nobody. Definitely not me or Sammy Law, motherfuckers. We're out here. We don't stop. We win.
Might stop a bit, mate. I think my fans are pretty happy. I think it's gonna stop me a little, mate.
Max has an echo. Oh, for frick's sake. Sammy, why don't you kick it off then, mate? With
let me start. Let me give a little bit of analysis on what I'm seeing. We already discussed a little bit of this. I mean, I'm with you there. So, guys, here's the deal. I've been saying this quite a bit. 20K was flipped into a little bit of resistance when we fell below it. We then managed to find support multiple times off this level, and we're now looking like we may be tested again. I'm not too worried about this. As long as Bitcoin manages to hold above 20K, I'm still going to be looking to target this resistance area to clear the 2 prior highs, which are actually pretty much the same high. If we manage to test the area again, and guys, as I'm going along, please just drop a comment to let me know how this is, because if this isn't going to work, there's no point with continuing. I'll just have to call it quit here. But if it's still, if you at least understand what I'm saying, I'll carry on. But yeah, if we manage to break that 1.6k area, that's where I'm still looking at that. 22 to 24 still being the next key zone for this market. It all really depends on, obviously it looks like the market wants to pull back just a little. We've had a bit of sight over the last couple of days. The 7-day chart, still a good amount of green. Still a good amount of green. All right, we got mixed signals here. Some people saying keep going. Some people saying it's not good. Can we both turn off the cameras?
Yeah, I don't think it will change anything on my end not having a camera, but we'll try. Okay, talk now.
And let's just put this in full screen. All right, yeah, let's go. Get seen a little bit of a rally. Look at it, like sheer by 5%. I think it could, the market wants to go down a little bit. So again, both my eyes are just going on this level, seeing responses. If we're up losing 3K, I'm going to turn very, very bearish, because essentially means the market has been given a 7-day, 1-week chance to get above the 20K level and above it, and we lose that. We're screwing that chance. We drop below the level, which would make me think that if we have a chance to get back up here, we probably capture resistance or fall lower.
I just had an idea, mate. Maybe use your internet from your phone.
Let me give it a try.
Use your hotspot, because there's a lot of stuff in the chat. Yeah, I'll take over for now. Yeah, what Sammy was saying, just to kind of go through a few points he was making, like, 20K is a logical SR flip. We know that. $20,000 psychological support, usually turned as resistance. We already got that resistance. There was 2 trades to be played. I took the first trade on 20. Hopefully this is working nicely. I took a trade here, which I made 4.5% of a gain on that trade. Nice P&L, 1% stop loss, okay? You could have taken it again, guys. I actually wasn't at the computer or wasn't even in this trade, but you could have taken another trade here. And I think the main thing Sammy's trying to express here is that we are actually caught in between support and resistance. It's an SR play. You can see here's resistance, obviously, from prior. And also have resistance again at 21,670. It's around 21,670. You can see this wick through. This would have caught a lot of day scalp traders off guard, thinking we're going to get a break, didn't get any support on it. I was saying on my previous streams that, what we're looking for here in terms of for the bullish case is if we can get above this micro high, if we can break above this into resistance, what I'm going to be looking to do is buying it as support on the next retest. That is a very, very nice logical SR flip. Okay, that's where you can make a lot of money on these trades. This is my bread and butter. This is how I've made. This is how I've traded for years. This year I've been trading for the best part of a decade now. So that's how I've been trading for a long, long time. Not trying to play the breakout as such. Not trying to time the formation and breakout trade. I'm trying to try and actually get the retest of that formation, which you don't always get it. But if you're patient in the market, it will give you. If you only look for high probability setups, you're going to put yourself in a better situation because you're not forcing yourself into the market. You're waiting for your opportune moment, and that's when you're going to start making good money. So, like, I'd say, as of right now, looking at this market, we have actually not managed to get above here. My previous video on my stream, my previous on my stream on my YouTube channel was talking about this a lot. If we don't get above here, guys, there's no trade to be made. There is a short to be made at resistance. You can play the SR either way you want, depending on your narrative. So you can see here, now we're making lower highs, lower lows into this. Likelihood is, guys, we retest 20, potentially get a bounce off 20 again. I'll actually look to buy $20,000 for a bounce trade, 1% stop loss, play that trade. You might get another 4% out of it, guys. You got to remember, these freaking moves, legends, are no joke. Okay, this is a 4% move. This is a 4.6% move, guys. That is enough of a move to create insane gains if you know what you're doing. And guys, the last trade off 20 was 9.3%, almost 10%. Again, guys, that's life-changing if you're trading correctly or if you're just trading with bigger sizes, okay? So you can really do well with that. Obviously, you have to have risk management, 1% stop loss, whatever. But I would say that if you're looking at this right now in terms of if you put a gun to my head and said you have to choose where this goes, I'd say 20K probably comes first. Back down, bounce off it. If we can't then get above here, again, lower high, we get some sort of descending formation into it. I think we break down to the local low. I think we get another bounce. And actually, I do think 14K is the next logical support for Bitcoin down at these levels here. And I think this is actually very tradable. I'm not really a range guy, but I have taken trades in this because this is a high probability setup scenario for me in general. So, and just to say one more thing before Sammy jumps in, if we do just turn around like this and get above and hold above here, then we're looking like we can get through here. And then if we get above this region here is the more medium term plays. Okay, this is when you're looking to say, okay, fair play on the medium term now. We could have a good few weeks, maybe a month of up. And I think that the upside targets really are going to cap us at around 28,000. I don't see Bitcoin getting above 28,000 anytime soon. This region here is a significant area of resistance and support. So I can see it acting. There's a lot of orders there. I can see it acting as something, and I think it's going to be resistance. And that, guys, also, I don't know if you can see this on my chart. I think it's just working as a tab right now, but you probably can't see it. But I'll just say, if you go on mdxalgo.com, you can see the long to short ratio. Let's say we come up to 28K, and then everyone starts going freaking goddamn long. Then we could see potentially a different play there. So we have to wait until the price gets there to see what's happening with the long to short ratio as well. But yeah, that's.
Can you hear me, good sir?
I can hear you very well now, sir. How are you, dude?
I'm okay. Let's get this thing started with the webcams again. Yeah. Let's give this another shot. Can you guys see me fine? Can you hear me okay?
Sammy boy, you are back.
Yes, sir.
Look,
we're here. We're here
anymore. No fucking bear market.
No. Bills are paid, bro. Bills are paid. I had to transfer out of crypto.com. You know it.
Crypto.com are holding. Celsius had all your funds. They just released the funds back to Sammy. He's back in the game. You legend.
Here we go. Let me just blast this out to Telegram so that they know technical issues are fixed. Guys, smash up the likes. That was a shaky beginning to the live stream. But we're good.
Desecrate those like buttons, guys. Like this kind of content, because me and Sam are going to be doing more streams, and obviously he's back now, bro. Bear market's over. We're going up, even though we're going down. And yeah, man, that's like, I don't know if you heard what I was banging on about then, but like, yeah, guys. And also, we need to hit more likes, guys. We've only got right now, where are we at on likes? I can't even see where it says on this screen right now, but I think we've got 550 people in here. So we need 550 likes. If we haven't got 550 likes, we ain't fucking continuing. Okay, legends. So let's go. Hit this up. Take over, Sammy.
I'm down for that. It's a bit of a threat, but fuck it, mate. Why not? It's yeah, no, I heard a lot of what you said. The last thing that I heard you saying was, you were talking about that potential $14,000 bottom. And that's exactly where I am. I just want to. I mean, I'm getting a little bit tired of repeating this, but there's not much else to say really. If we zoom out, taking a look at this chart, there isn't much going on. For Bitcoin, especially like, okay, here on the daily time frame, you can try and pick out certain levels, right? Like, 17 down here at 14, you can try and pick out levels like this. But if you zoom out onto something like the weekly and we take a little bit of a longer term chart, it's actually pretty hard to spot anything really that's taken place on the chart until we fall down to 14. And even when we get to 14, it's literally all you have is this wick and these candles opening and closing. And I just I'm not totally convinced by this. I feel like that's not, there's going to be a lot of selling pressure pushing the price down if we end up falling there. That makes me think, we could definitely overshoot 14, and that's why I've got 11.6. This was a big, very, very important level for the market throughout the course of 2018 to 2021. And I just wouldn't be surprised if we ended up falling down that low. But again, the way that
go on. Sorry, go on, mate. Carry on, brother.
The way I try to, phrase these things, and I want to make this point. Let's just blow up my cameras real quick. I want to make this point very, very clear: is that I'm trying to visualize the market in terms of ranges, right? So. If we fall down to 14 or 11, that's not nice, right? That's going to be quite a big percentage drop and so on. But at the end of the day, it's only a support level, and that's the way that, when you visualize the markets as a collection of support levels and a collection of resistance levels. That's, it's quite hard to get scared of what's going to happen. It's quite hard then to be worried because, you're defining how the market can move just based on these levels, and what happens beyond that doesn't really matter. And so I'd just as easily be looking at 20k as resistance and 28k and so on. And that's when you can visualize the market like that, these drops are not painful anymore, because that while percentage-wise you might be down quite a bit, you're only literally one market rally away from being in a totally different position.
Yeah. The market can switch so quick in crypto. Yeah, no, I completely agree with you, especially the stuff about horizontals. I've been trading for a while, so I'd say that just like generally speaking, price is quite linear. No, it is just flat price levels. If you want to trade on trend lines, there is, I'd say, I think people rely on trend lines and pattern recognition a little bit too much on micro scale. On higher time frames, these things are I definitely take into account. But I think people really they say, but the price is exactly this on this fucking trend line. It's like, well, this is a slanting thing looking at on a chart. So I just have to give a word of caution to that. And then I agree to you as well. I think that it's only prices, and fear is a very powerful emotion, and things can happen which are crazy. The market makes the fools out the most, and we know that. One of the quotes I remembered from reading, I think it was I can't remember what it was by actually. I think it was Money Master the Game or something, but it was markets can do anything at any time. Like they can do literally anything at any time, any moment. So you got to be really careful. And I think what we have to look at as well, looking at the charts, I was on the charts real quick, is that 14K region. I can't get up the MDX algo right now to show you the long to short ratio, but
I can.
Maybe you can pull that up. I'll stick to my chart for 1 second. So I'll just quickly show something. But if we're going to get a really big dive down, we're going to need a little fuel. Okay. And fuel is basically longs. Longs when the market goes down and shorts when the market goes up. You get long squeeze and short squeezes. Okay. And at the moment, I think a lot of people are misinformed by thinking that everyone's smashing the spot sell button. I don't think that's the case. I actually think this is a lot of forced selling from a lot of longs getting liquidated. You've got to remember, guys, the market was 80% long at the top. Okay. So what does that mean? If everyone's long in the books, when the market goes against them, they're forced to sell. Everyone's forced to sell. So it's a lot of forced selling on the market. If we come down lower and we get to these levels here, and you start seeing that long to short ratio begin to flip, where we see a lot of shorts coming into the market, and by 14K, we're at 70% short, then actually the fuel is up then, because there isn't any way to flush out the order books, because liquidations and stop losses getting hit are where market moves, that the price will move the fastest. Like COVID.
I just want to jump in on this note. One of the things you mentioned about how the stock market performs so well in anticipation of the economy getting better is just that, in markets, we're just trying to front run everything. We're trying to get in before the thing happens. And so if everybody is already short, if everybody is already short by 14,000, like you just said, well, the move's done. Now you got to think about going the other way. And it's the same with this headline I keep bringing up of 70% of everyone in the US that's in crypto joined last year. Well, that's a bad thing. That, and clearly we can fucking tell now. But I mean, no one wanted to heed these warnings when I was saying them before, and when others were saying it before as well. When everybody is already in one direction, the only thing they can really do is close out. And that's exactly when Max is saying.
We were laughing about it. We were saying there's only two fucking buttons. It's a green or red button. If you're red, and the other way is green.
Right, exactly. That's it. If 70% have already hit the short button, you gotta, they gotta start closing it, whether they press it themselves or they get forced to by the exchange, to start pressing green. And let me pull up.
I'll elaborate on that. Yeah, go for it. I'll quickly elaborate just real quick on that point about what you just said, because you said that this move here in the stock market was the anticipation of future inflation. And that's exactly what it was, in my opinion. Obviously, there's other factors which come into this, because we knew that as the economy was getting worse, people were running away from the dollar. So they were trying to get into a safe haven. It wasn't always just about the dollar being printed. It was other stuff as well. People get, there's greed involved in this as well, fear and greed. So it was a bubble, basically. But during this time period, I'll quickly elaborate on one more time, because I say this on my stream. The economy from this moment here to this moment here, the economy only got worse and worse and worse and worse. More redundancies, more unemployment, more companies going under, more huge fucking bailouts. The economy was probably at its worst around here, just at the very end of all of that crap, when everyone lost everything and everyone had no job. You can see, guys, very, very simply that the market went up. The market only went up. So the point here is that stock markets and money markets in general do not correlate with the broader economy. The economy is not correlated to a stock market, an equity market, a commodity market, Bitcoin. It's all bollocks. Bitcoin can go up or down regardless of the economy. And the fact is now the economy, this was the depression. The depression was through here. You can't get any worse than turning the economy off. That's literally worse than 1921. At least the economy was still on. You couldn't even go out. You couldn't even freaking go outside. So now the economy is back on. We're seeing higher employment, less redundancies, more companies being bought, investments are changing. We're seeing more efficient businesses. We're seeing more people going online using Zoom, less costs, more efficiency. All these things are good. Guess what? The markets are going down. So I just want to make that point because everyone's like, but we're going into another recession. It's like, well, we're not. We're coming out of recession in the economy. We're going into a recession in the stock market. So correction is 20%, recession is 40%, over 50% is a depression. Okay, so just want to make that point there, legends, for everyone watching. Over to Sammy.
So yeah, great point. Great point. I mean, this is why I like these streams, mate. I fucking learn from you while we're live. Like that's amazing. I want to highlight the MDX algo thing that you brought up.
Yeah,
this is just the long and shorts right here. Let me refresh because it looks like this data is not loading up properly.
Yeah.
Switch the time frame. I'll let you talk about this. I just wanted to bring this up so that we had it to look at.
Yeah.
I mean, longs are now. Look at that ratio. That's 1.1. I mean,
52%
longs.
It just went for a split second. It went more short, and guess what? Bitcoin did. It bounced off 20K and went to 21.6. Like it's. I'm not saying that this is completely 100% always the market goes against the majority because it's not true. Because markets can say a lot. They can stay very irrational for a long period of time. That things can stay oversold for a long time. Things can stay overbought for a long time. The longer they stay overbought or oversold, the more tension is built up, and then the bigger the break usually. But the longer short ratio right now is looking a lot better than it was, at 69K. We had 75, 80% long in the market. Guess what? It went down. So I think just for a good sentiment indication, not the full strategy or anything like that, for a good sentiment indication, just look at the long to short and think, okay, well, if there's 70% of the market short, we're probably getting close now to there being a short squeeze. And then those could be very profitable trades because we've seen those in our past. I think when Bitcoin went from, so it was called the China pump. It was after Bitcoin went to 14K back to 3K. In between that move, we had a dump from a descending triangle down to around 6. And then we pumped all the way to 10 in one go. You can probably see it on the chart, actually, if you zoom in on it, Sammy. So if you look at the 14K area we're at, yeah, okay, so go back a little bit, obviously. All the way back down here, yeah, perfect. So you see that big wick in the middle, that big 2 massive candles in the middle? So there's the 14K region. No, go. So the date would be November on this chart.
Oh, right here.
Yeah, see those 2 big candles there? I was actively trading that. And that was a huge short squeeze. That was one of the biggest short squeezes we've seen because everyone was getting
this was 40% up in 2 days.
I think it is the biggest move. I think still to this day, it's the biggest move in the shortest period of time for Bitcoin. In 2 days, it went up 40%. And that was, I remember that so clearly because the long to short ratio was so fucking short. Like it was literally like 90%. It was like, we are going down. And then guess what? If you light the fucking spark at the other end of the end of the candle, it's like a freaking piece of dynamite. It just blows off the other way. And there's a domino effect all the way up. So that's, I think we're due one of these, I don't want to speculate too far, but I think we're due one of these crazy.
Wait, we haven't had one for a while.
Yeah.
We haven't had anything like that for a long time. This was the last crazy ridiculous wick kind of action that I remember seeing. When we fell in one day from 53 to 40 and then recovered right back up to 50. 42 even.
What was the percent on that? I think that was about a 30% move, wasn't it?
Oh no, not that much. Yeah, this was a minus 20%.
21. Well, if you go from the other candle, if you go from the do 2 days, I think you're looking at 30%, right?
Yeah, close to 26.
26%.
Yep.
Crazy.
Yeah, I mean that's just essentially wiping out a third of your money nearly in 2 days. So that's.
I remember the liquidation level.
Yeah, but I mean, this was an obvious range for the price to bounce off. Those of you who are looking at basic, horizontal levels again. I mean, this was pretty much the high that Bitcoin set when it rallied up at the beginning of 2021. It's the high that we set on our stellar rally from 29,000 up to 42. You guessed it. And this is even where we consolidated when we pulled back from 53. So it was a logical area to bounce from. You know, I mean, it did catch a lot of people. Caught me by surprise, to be fair. I didn't expect it to be so intense, but again, you know, it's all about these levels. It's all about these levels. When you see the market in terms of levels and nothing else, none of these things can catch you by surprise anymore.
Well, yeah, I think what you just said, like Bitcoin, the only consistent thing about Bitcoin is the consistency surprises, and like I think that's you know, as a trader, it's good because as a real long-term day, medium-term, long-term trader, you're not really looking for the crystal ball of where the market's going to go. You know, it's actually just about playing the levels, like you said, in and out, day in, day out, 1% strategy, just buying, selling, support and resistance. And then if you get shocked on either or, if you do that well enough, you can just be on the right side of that move. And you're just shocked that you made more money, or you're shocked that it went like that. So a lot of people who are good traders do get shocked a lot because they're not actually looking to try and predict what's happening. They're just looking to just try and buy and sell levels. And that's what we're trying to do here. If you're actually in the trenches right now, trading day in, day out, because a lot of everyone is just basically gambling. So that's kind of what we want to talk about, like the actual, because I talk about this to you, Sammy, as well. I'll quickly whip up my chart. There's two ways of looking at this. One second, let me make sure that's cool. That's better, isn't it? It's like we can predict maybe that we're going to go to 20K right now, but saying that isn't going to get you into a trade. Like what's the trade here? The trade is just to buy 20, you know, because we've just got support on it multiple times. We've seen it as resistance. So if you buy 20 with a stop loss just underneath it, you can get a bounce off it. You can play a trade, and then you're looking for resistance. Like this is actually a really nice trade from 20 to 21 because you have a resistance already carved out from the previous high, the micro high. You buy 20. That was such a nice trade. That was beautiful. It was so nice. It didn't try and fuck you over. Like the market usually tries to fuck you, but it literally, you got your wick in, you got your wick out. Beautiful trade from 20 to 21.6 right there. And that's a 10% move. So life-changing stuff. So yeah. I know what the next topic is, but I'll just say, like, I'll ask you a question, Sammy, like, because everyone wants to hear this. So in terms of Bitcoin for the next 6 months, how would you go about looking at this market for the medium-term plays?
I don't like entertaining questions like that, man. And the reason for that is it's actually fairly straightforward. Is for me, the way I look at the market, in order to say what's going to happen 6 months from now, I need to say what's going to happen 5 months and 29 days. And just keep going back like that. Like I need to know what's going to happen tomorrow and the day after and the day after that and the day after that. So I think it's a pointless endeavor to try and guess where we're going to be in 6 months. And if you look at most of the long-term predictions that most of your favorite analysts are going to be putting out, they're wrong, because it's ridiculously difficult to try and place where we could be in 6 months, just for the simple fact that, you know, if we get one of these, you know, crazy short squeeze candles, it looks so small now, but that was the 40% pump in 2 days. If we get one of these again, I mean, that could totally just ridiculously entirely change the course of the market. And you're talking about 6 months, mate. Like that can happen in any 2 day period. So I have absolutely no clue.
Yeah, you know, the question was more about like what kind of trading strategy you're going to take for that time period. That was the question. So don't try and predict it. Just what's your kind of how are you going to go about trading that market for the next 6 months, basically?
Yeah, I mean, it's fairly straightforward. Obviously, I'm just going to be looking to see if we start, you know, rising up to resistance levels, capture some resistance, and trade it down. Obviously, I would like to sell some more Bitcoin spot on a reaction rally, depending on how strong that reaction rally is, just in case this ends up being a much longer thing. I'm very, 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 very interested in buying gold because it's doing absolutely nothing, and I don't think that's going to stay this way forever. So that's another thing that I'm keen on doing. And I think a lot of the big money can just be made from like shoving your cash in and out of altcoins like Ethereum. You know, so I'm going to be looking to see how coins like this, you know, if they start to break their resistance levels and fly up. You know, if we break, this is the range low for Ethereum that it's set basically in the middle of 2021. We're now back testing it as resistance, but if we manage to climb above this level and we get back to the, you know, to the top of the range, let's say it's just over here, that's still a 33% increase, right? And so that would mean potentially 33% more Bitcoin if I were to shove some Bitcoin into Ethereum, you know, at these kind of price levels on the Ethereum versus Bitcoin charts. So I want to be making some plays like that. Those are the longer term plays. Obviously, I'm still a degen, so I'm still going to try and do these more short-term derivative trades. Like Max said, that 20K long, this is a nice range. I'm measuring 7%. I'm not getting anywhere close to 10, but 7.5% range on even 3x leverage, 5x leverage. You can start making these.
Let me just do it exactly. So literally wick to wick, it's 10.8. So if you manage to get in at the very low wick, at the very high wick, so like if you manage to buy 19,700, I'm not saying this is obviously this is very difficult to do, but I'm saying that is what the potential bucket is. That's like you call it like that's the market size. It's 10.8, but you might have got 7, you might have got 6.
Yeah, I mean, realistically, you're not going to capture the whole thing. I mean, if you're good, you might have captured just this, which is still 8%, and that's again like on 5 times leverage. If that's what you're using, that's a 40% profit. So, I mean, you're still doing pretty well, ladies and gents, with that kind of, with that kind of trade. So I'm going to be looking at stuff like that. I'm also quite interested in seeing how we respond to resistance levels. I don't actually like taking longs in bear markets like this. I mean, I'll do it anyway if I see a high probability setup, but obviously most of the high probability setups are going to be, shorting these resistance levels. I wouldn't short this resistance level in particular now because we've now tested it twice. So if we end up hitting it again, I would actually expect that we break it. That would be, potentially a little bit dangerous. But then we've got a few more resistance levels a little bit higher up. We've got resistance between 22 to 24. We've got more resistance up around 28. So those are the kind of levels that I'd be looking to trade some moves in the market. But right now, we are right in the middle of a range. I think quite a few people are trigger happy. They just want to trade something because they think that's how you make money. This is very much the time where you wait. I mean, we are literally like right in the middle of this support resistance range. It's just not a good place to be making trades.
You don't want to be entering anything right now, or even exiting or anything right now. There's nothing logical in the chart right now just telling me an entry or an exit. That's the entry for a short. That's the entry for a long. You're in fucking no man's land right now. So if you are doing this, I find it very difficult to chase markets. I know people who literally on the fucking 1 second, on the 1 minute on automated strategies making money. Fair play. It's just not my thing. And also those kind of guys like to trade. Like, I'm not gonna lie to you, trading isn't that fun. Like, it's sexy at the start, but I got into trading to make money and have freedom, not to sit in front of my computer every second and gawp over oh my god, the candle. Maybe it was like that for the first few years, but after basically nearly a decade of it, it's not really the same. But I think it's exactly right, man. It's just, we're just playing levels here. I think to answer my own question was about the 6 months thing. I think we're going to probably go through some sort of, just bear market sideways choppy range from probably around, I'll just say 14 to 28K. I think that's probably the downside, most probable downside, most probable upside. I'd say that's kind of the range we're going to be working with. I think it just bounces between there for 3 to 6 months. Not ideal trading for me. I actually predominantly made most of my money in big term or medium term swing longs. So I'm a swing trader predominantly now for the last few years. The scalp stuff isn't as interesting to me anymore. But I would say, I always say this in my stream, Sam, and you probably agree with me. It's like people need to cut down their strategies to 3 time frames. Like, everyone forgets the 3 time frames. It's like you could be long on the 1 minute and short on the weekly. All right. So it's long term, you're a buyer. Medium term, you're waiting for potentially some sort of swing long from here because of momentum. And in the short term, we're probably going lower right now. I think we're probably going to hit 20K again. Looking at this formation.
Yeah, a lot of people have troubles, understanding that different time frames can be telling you different things. But obviously, you've got your one very very long term prevailing trend for Bitcoin, which is ridiculously obvious. Yeah. I mean it's only up. But within that you get your little cycles. You get your 2-year bear markets. But within those 2-year bear markets, you might have a 1 month uptrend, and within that 1 month up, there's so much going on, and you just can't be ripping trades if you're not aware of how that works. Because otherwise you'll just constantly. I mean, you won't even understand time. And with these markets, you've only got 2 pieces of data. You've got time and you've got price. And if you don't understand 50% of that, you're fucked, mate. Like you're not starting on the right foot there.
And people don't understand as well. Like, time is resistance. So markets going sideways is as good as markets going down or up. It really is in terms of the time. So if a market goes very, very down very, very, very quickly, you'd usually be oversold. If you go up very, very quickly, you're usually overbought. And that's just because of relative strength, the speed of the market in terms of the time it took. Okay, that's what relative strength means. Okay, so if you think about sideways markets, what can happen a lot of the time is actually a lot of the momentum indicators can come and reset. And they can reset whether it's up or down to the middle. And then you're just in the middle range. And then you can see snaps down because of volatility either or way. So like, this is my kind of like lookout in terms of if you put a gun to my head and said, what trading range you're going to get and what trading strategy you should have, I think is what we're going to is something like this for.
But what this means also is just, like, I mean,
maybe even here as well,
repeated cycles of like, altcoin season and then altcoins crashing and, like lots of opportunities to trade them and just keep stacking those sats, just keep stacking those Bitcoins.
Yeah, long-term plays. Look where we're at, guys. We're at this freaking trend line all the way down. This is macro long-term lows linked up. Very, very nice. And everyone's like, you're not drawing the pitchfork properly, sir. It's like, fuck yourself, bro. All you're doing with this chart is just lining up what is already presented on the fucking PA. Like, this is as simple as it gets. And this is all you really need. All this regression stuff, everyone's saying like, but it needs to be like this and it needs to be like that. You need a regression. There is no bloody way in hell that regression lines on Bitcoin are any more useful than a trend line, because we don't know how early this really is for Bitcoin. I believe that Bitcoin's still really, really early in terms of the market cap. We're looking at markets like traditional equities, which is $250 trillion.
Where's
Bitcoin's
my lotion, boys?
Did we lose it? Did we?
No, you're bringing out the moon boy sentiment that I like to hear, man.
Yeah, no. Well, I'm just saying like the market capitalization of Bitcoin is so small that I don't think using regression lines is appropriate, because this can do very, very crazy things to the downside and very, very crazy things to the upside. So regression lines are for much more long-term logarithmic scale markets, like bond markets and stuff, or gold. Yeah, regression, that shit, but like not crypto, because we don't know what's going to happen with Bitcoin. And $400 billion is called fuck all. Like you actually mentioned gold, Sammy, a second ago. I actually really agree with you on this. I think gold's very, very, very nice right now. I think gold's going to go to $3,000 if it breaks.
It's consolidating like near an all-time high, mate. I mean, that's like as attractive as it can get, really, isn't it?
Yeah. And look at all the moon boys will say this. This is a huge cup and handle. Like, this is very, very, very nice. We have a breakout point. Actually, this is actually more bullish than the cup and handle because the high was higher. Usually you hit this and you hit it as resistance and you get or a lower high. Okay, but we actually got a higher high already, motherfuckers. So that's really, really good. Nice curving. We had a nice parabola coming up here. I'd actually look at this as some sort of, we had a descending formation which broke out to the upside. I'd look at this as some sort of sideways channel market, maybe get a few more, maybe a year more of that, to be honest. Gold can do a lot of shit for many years. As soon as you get above here, you're going to probably look at 30, 35% up, maybe more. Yeah, this is go from the high we got to where 3K is. Yeah, looking at 37%. So it's definitely a trade to be made there as well. Beautiful. For gold.
It's beautiful.
And gold, it's like gold, you can relax, people. Like Bitcoin trades like gold on steroids. Like Bitcoin's like that. Fucking pump it, legends. And gold's just chilling out, having a cigar, nice glass of whiskey. Everything's okay. The sun's shining, baby. So it's more of a relaxed market to trade. Much more relaxed than Bitcoin, for sure.
Guys, if you're just tuning in now, then just so you know, we are doing a dual stream. If you're watching this from my channel, you can click Max's name in the title and description. If you're watching this from Max's channel, you can do the same for mine. And guys, smash up the likes. Let's get some more viewers in here. Make sure you're subscribed to our channels already. If you haven't done so, you got the bell ticked, all that good stuff. Are we cool to do a little Bybit plug for our respective channels?
Yeah, man. Let me say one thing. I've got like 310 people watching, guys. On my channel, if you're an MDX legend, because I know you freaking are, go and batter the like button, because we want to get more people in the stream. The more people that come in the stream, the more people just find about crypto in general. It also supports me and Sammy's channels. And look at us grinding our titties off in the bear market for you. And I'm coming back to work, legends. I've been taking some time off generally, so I'm coming back to work hardcore over the next 6 months. So yeah, like you said, Sammy, let's do this. Like that shizzle.
Smash it up, ladies and gents. We got way more people than likes in this stream, so let's even that out a little bit. You guys know the deal though. For where I'm trading, same for Max. We're both using Bybit. We've both got our links in the description. Max, I don't know if you know this, but there's a campaign running where viewers can get like $4,100 for signing up using our link.
I
so
know.
that's going to be in the description of my live stream. It'll be the same for Max as well. Check it out. It's free money.
These exchanges, like I traded traditional markets as well, bro. Like there is literally like, okay, a lot of these like CFD exchanges, there's no fees. Okay, so that's good when you buy stocks and shares. There's no fees involved. But any derivative platform I've seen are taking crazy fees, and they're not giving you thousands of dollars for free. So like, I think Bybit, Binance, they are going to be the biggest exchanges, centralized exchanges. I have to say as well, they're going to be the biggest centralized exchanges in the world.
The thing about this that's different to like CFDs and all that is like anybody can just launch a Bybit competitor or something, right? And so there's so much poaching, there's so much competition, and what competition does is it gives better products to everybody, which is why Bybit digs deep into their fucking pockets to try and impress people.
Free market capitalism, baby.
That's it, ladies and gents. That's what we're getting. That's actually one of my favorite things about crypto. It means that, you know, it means that things are quite extreme. It means that things can get ridiculous and you know, just blow up to where they perhaps shouldn't be, like Celsius and so on. But it also means that, you know, you've just got purer expressions of money. And that I think we're kind of losing that. You know, one of the big things I'd actually love to get your thoughts on this. One of the big things that was in the news recently is Goldman Sachs is trying to buy Celsius's assets 20 cents on the dollar, meaning at an 80% discount. Yeah. Well, they're looking at doing it through one of their private equity firms. I don't know, something like that. I didn't really read it fully, but I did read some of it. You know, I mean, to me, that's just another sign of this space continuing to mature. And you know, almost what we've got is like, you know, a bunch of idiots have brought something up to, you know, like a kind of decent level, and now you've got the really big guys just coming up and picking it up so they can, you know, do their thing with it. Which would be the same as like you know, there's Waze, and then Google bought it. You know, like a relatively small tech company, and then a really big guy comes and just makes it bigger, and then and what it was before the acquisition is totally forgotten, and it forms a new identity. I
think it's an interesting thing. It also shows you like bigger institutions, because they have so much money and they have already a running company and a business and cash flow. It shows you that they have this great ability to come and buy things at such crazy discounts because they're so patient, because they're not forced into anything. They've got so much money anyway.
Yep.
That's another very, very important thing to learn about just generally trading, is like, just don't force yourself into it. Because if, you know, the bill's coming, shit's happening, the more you force in, that, you know, if you can wait for years for these opportunities, that's where you're really going to make some life-changing games. But, you know, Goldman Sachs getting in, they need to get in, bro. Like, I know we know the reason I'm called MDX Crypto and not MDX Trading, which what it used to be, is because crypto is the future. Like, it really is, and I do believe in that long term. So, like, I can see.
So I have a question for you. Something very, very interesting I'd like to bring up, which is this chart right here. This is GBTC. I'm sure you know about this, but let me just refresh viewers on this.
Grayscale, right?
Yeah. This is basically this is essentially literally a derivative, really, at the end of the day, isn't it? And and it's, you know, US traders love it because I can't remember actually. I think it's like tax incentives or something.
They manage it for you, so you can get, you know, big institutions or big money management firms or family offices, or like, you know, say an individual who's got fuckloads of money. They can get that exposure to crypto without worrying about having it on their own liability. You know, they kind of just deal with it for you.
Okay. The interesting thing about this is this 33% discount that it's at. You know, on one side we've got some players like Goldman Sachs looking to get into the space while things are ridiculously discounted because of poor decisions being made. But on the other side, you've got, you know, an asset, a tool that's, you know, when you're talking about institutions with their deeper pockets, if they want to get into Bitcoin, this is one of the first places they would look. This discount, you know, I mean, if Bitcoin at an attractive, you know, if Bitcoin at $20,000 is an attractive price, but you can actually buy it for 33% less than that, you would think that this discount would get eaten up, and that it would kind of come back to normal, so to speak. Like that this would arbitrage out, and it would just the discount wouldn't be here. But the fact that we haven't seen that, to me, could be a sign that actually, from those longer term players that aren't in a rush, they're not actually interested in this yet. And so we're seeing some mixed signals like that, and that's something that I'm going to be watching to see how we might come out of this. Because, guys, I mean, with this 2017 Bitcoin top, I just want to remind you, I mean, obviously this is completely the wrong chart. We're gonna have to look at the
it's interesting you mentioned that, though, because you can see how the GBTC price from its that first high in 2017 was a lot higher than where Bitcoin went. So maybe what you're seeing on the GBTC
that was like, I don't even know what happened there, because I don't remember GBTC even existing back then. This goes back to 2015.
2000 and like, I think it was 2016 they started up Grayscale.
Is it? Okay.
Maybe,
well, I don't know. I only started hearing about this, like 2018, something like that. Maybe not even, maybe later than that.
Yeah, no, I think it's been around for a while, and I think I actually watched a documentary about the second richest person in Mexico, the richest, wealthiest dude in Mexico, and he actually got into it at around $700. I think he was buying in, and then he actually had a very, very interesting quote, which I can't remember exactly what it was, but I think this is a good learning thing for most people. It's like he actually wasn't allowed to sell his GBTC for a lot longer than he wanted, and then he actually made fuckloads more money because he didn't sell it, because he was going to sell it at double the price, and it went obviously up to 20,000. So he said that, I think there's obviously a famous quote which says, time in the market is better than timing markets, and that is generally true. But like, I'd say that we can all learn from just having a longer term perspective, because there are more billionaires who are investors than there are traders. So like, just generally speaking, like, that long term narrative can really, really do crazy shit. But you have to wait a long fucking time. So you might get a bit gray before you get rich. So that's kind of what you're doing there.
I wanna look at some comments, some questions from people in the chat. What do you think, Max? Guys, if you have questions, let's see them dropped in the comments. I'm actually excited for this because I can see that you can like show comments on the stream. Look at that. That is cool.
You mess around with that. I'll go through one more thing as well I wanted to talk about, and that was Dixie. So I think this is important right now. Let me make that. Actually, that's probably okay. So this is okay. Obviously, guys, we know that if the dollar is rising in its strength, that people are basically selling equities, commodities, cryptocurrencies, indices, assets generally into the dollar. So the dollar strength means that more people are selling their assets into the dollar. And we've seen that over the last few months. We've seen the dollar coming up and getting stronger. That means that people are selling shit into the dollar. But this scenario here, and I know this is not drawn perfectly and everything, et cetera, et cetera, et cetera. But if we do get something like this, it's something to look out for. And I know, let me just draw this again because it looks a bit shizzle. What we're looking for, if we do get some sort of double top formation here, and we do get a deviation of the high price, and we do see some weakness, this is going to basically be something which would be a confluence factor for you to say, now my medium-term plays, because I'm long medium-term. I have longs all the way down. So your medium-term plays are looking decent. And medium-term, I mean more than 6 months, okay? 3 to 6 months maybe, over a year's long-term. So if we do get this deviation does stand here, you can see, I'll go on a daily scale to make it simpler. If this does stand, guys, and we can't get back above here, that's a deviation of the high, okay? So if we do lose, we got levels here, obviously. If we do lose here, I think that's the most important place. We come back down, guys. We rally back up. We get a lower high. Come back down. Here's the bottom level, right? Descending formation. Probably get a break, some sort of retest. If we get something like this, guys, that's going to be very, very, I'm not going to say it's 100% correlated to Bitcoin as such, but I'd say it's going to be very good for gold. It's going to be very good for equity. I think Bitcoin can go up regardless of the Dixie going up or down. I think Bitcoin can go up or down regardless of Dixie, actually. I think if the Dixie's going up, I think Bitcoin can go up with it. I think if the Dixie's going down, Bitcoin can go down with it as well, because, it's fucking $400 billion. So who gives a shit?
Bitcoin's quite small, so it doesn't necessarily need to follow that same inverse correlation. But exactly. It's a very, very risky asset. And so, if the dollar is trending down, the stock market and so on might be performing well, and that, I think, is what's going to open up the floodgates for Bitcoin, to start rising up. But if you do see the dollar continuing to rise up, of course, Bitcoin could do that too. But conventional markets are probably going to be getting screwed at that time. And so I just wouldn't expect money to flow into Bitcoin so readily. It's just going to sour the whole atmosphere. You know, you need people to be happy. You need people to feel greedy. And that's only when they start considering more risk. It's like when you and I make a shitload of money on Bitcoin, and so we look at Ethereum, and then we make a lot of money on Ethereum, and then we look at other shit coins in the market.
Sure.
You know, it's just that other people with much deeper pockets, you know, their risky play would be, I don't know, a particular stock. Their safe play might be the S&P 500. And so their very, very risky play would be Bitcoin. And that's why I actually quite think, and this is it's quite hard. I'd be impressed if anyone can deny this with a serious face. Now, you know, obviously when things get tough in the real world, Bitcoin is not a hedge. Bitcoin's actually been one of the worst performing assets since this whole like crash began over the last couple of months. And so, you know, I actually don't think it's gonna but it's not a problem. Yet, you know, you can just keep trading it down. You can keep trading it up. You know, these things are not concerning me as a trader, but you know, it's just about staying realistic here, guys. You know,
I agree with you. I agree with you, but I also like slightly disagree with the terms of it being a hedge, because you got to remember as well, you know, Bitcoin, if you had have held your freaking assets in oil, right? Oil had a huge downturn as Bitcoin rallied here. And you got to remember as well, like after COVID, this rallied in the anticipation of higher prices in the economy. Even here today, right? When COVID happened, we printed trillions of dollars in the economy, right? And all all consumer prices are going to rise at different rates. So like toothpaste, oil, fucking cars, used cars, whatever. They all have their own mini inflation rate because of some sort of logistics, okay? So all things are generally rising in price because there's more dollars in the economy. It's like a sponge. The economy is going to soak up those new dollars. And it would be unfair if people who are selling shit were selling it for the same price when there's more dollars in the economy. So things have to rise, generally speaking, over time. And then even today, Bitcoin being at this price has still managed
that's with things that don't have much speculation. I think that's the important thing. Like Bitcoin is very speculative. People don't speculate on toothpaste.
Yeah, of course, but I'm saying that. Well, you know, you could buy a warehouse of toothpaste and wait for the price to rise. Like you could buy a warehouse of fucking cars as well, used cars. Anything can be traded, but like I would say that even at the price of Bitcoin today, you've still managed to hedge against the increase of oil prices in general. So like if you think about it in terms of all prices will rise, Bitcoin still, generally speaking, will always, you know, I actually don't look at Bitcoin as something. Actually, I look at this is the quote for gold, right? It's a famous quote from I think it was Oscar Wilde, or maybe it was JP Morgan from back in the day. But he said that I don't buy gold to get rich. I buy gold not to get screwed. Because gold, all it really does is it does an accounting for the amount of dollars in the economy. So if you print more dollars, the gold price will just rise. If you deflate dollars in terms of doing some sort of reverse repo, then the price of gold will go down. I think gold, like I said, I agree with you and I disagree with you, because I think gold's not there yet. I think Bitcoin is not there yet, but it's showing traits of that in a very volatile manner. So like it kind of, you know, and also I don't think that store of value has anything to do with volatility, in my opinion. I think store of value only means long-term supply. But yeah, I agree and disagree. But I would say that like even today at the price of Bitcoin, from where the printing happened, even today, Bitcoin is still acted as a hedge against prices in the economy rising. Whether it's oil, fucking food, toothpaste, whatever it is, if you held Bitcoin other than dollars, you're still better off than holding dollars. So it did actually.
Yeah, I mean, if you got in before the big blast off past 20, then you'd be fine. But I mean, anything after that,
anyone up here,
you're fine. Right. And that time frame is so big, man. Like that's basically, that means anything in the last pretty much a year and a half. You know,
printing happened here.
Not.
Do you remember this, Sammy? Do you remember this fucking time period here? This was when everything was flat and boring, and I was doing completely different things. That's where I actually learned affiliate stuff. Like this was the kind of time I was looking at that more. I was building different businesses. This time period here, this flat shit, was literally when they were just printing. It was like the money printer go, bro. Do you remember all the memes coming out, like that fucking thing, like doing the wheel?
That's where all the furlough stuff was happening. Yeah, absolutely. The government grants. I remember friends in the UK would be taking out grants from the government. Grant meaning you don't have to pay it back. It's basically fucking charity. And you know, you just fill in a form. That was from new money that was printed and so on. It's pretty ridiculous.
It's ridiculous. Well, the thing is, they're not printing money. You can't print money. Money is gold historically. You can't print real money. What they're doing is they're printing economic weight. And what they're doing is governments, what they're doing when they print money, they're printing political paper, and then they are deciding where that economic energy, they think they can play God. So what they're doing is they're deciding where that economic energy should go in the economy. And the more you do that, the more you start warping the free market. And the free market gets all warped and crazy and weird. And this dude's like, no, but we need to do this. And then we need to put money in this. And then we have to interest rate this. And then what happens is you get these big bubbles all around the economy. And then what happens is the free market fights back. I think Milton Friedman described this amazingly. And he was like, all you're seeing when you see bubbles pop in conventional, so you say, like you say, more, okay, conventional in the terms of like long-term history, like I'm talking hundreds and hundreds of years. But let's just say today in the last 150 years, when you see bubbles burst, what you're just seeing is like the free market fighting back against basically control from central banks and governments. So that's what you're seeing. When you see these housing markets crash, when you see all this, it's basically the free market fighting back. And like, yeah, you know, we won't go into this too much because I fucking can rant about this for donkeys, but Bitcoin is basically free market capitalist money in a sense. It's like the freedom, there's like the freedom fight of money.
Free market, mate. It's one of my favorite things about it is no matter how much any government tries to control it, it ain't gonna happen. It's very, very difficult. But there are many signs showing us that we might still be moving in that direction. Like I said, with Goldman Sachs being a perfect example that's very, very recent, trying to buy up Celsius's assets. If that keeps on happening with mining operations, for example, like it's all about who can put more money into it, and who's potentially willing to pay over market price, who's potentially willing to run things at a loss for a bit of power, and so on. I think we are seeing it, shift in that direction a little bit, which is a little bit sad because we like to believe in this beautiful.
It cuts out a little bit there, Sammy.
Things are every time the market. Did you lose me for a sec?
Yeah, I lost you for a sec. It's back now.
The thing is every time the market crashes, what's happening is you're like regular people like you and I, or like the viewers on stream today are selling their Bitcoins, and then much more powerful people who are not in a rush are buying them at cheap prices. So wealth is being transferred to more patient, more powerful people. That's literally, and it's got very strong implications, and I just don't think they'd have Bitcoin's best interests in mind. That's me. I just don't.
Well, it's like this as well. Like these private banks, their days are generally numbered anyway, because it's central banks right now which have like this horrible grasp on the economy. Private banks are they're kind of like the middleman, because these central banks are now trying to create these central bank cryptocurrencies. They're not cryptocurrencies, but currencies where they can just deposit money straight into your account, your government account. So this is happening right now in the pipeline with America and China. China are trying to get rid of all private banks and make it so you just have the fucking government bank. So this is happening as well. So I would say that the private banks aren't really the problem, because they haven't got the real weight of gold. I'd say that it's central banks which are going to be the real problem next. The private banks are kind of already on the way out, even though they do have a lot of power. Because you got to remember, central banks can print political paper backed by nothing to then buy Bitcoin and gold if they wanted to, which is crazy. They can literally just print gold, basically. You're cutting out a little bit here, but I'll just keep ranting. Governments, the reason America's so powerful is because it's not because they have the ability to print dollars. Now, fuck dollars. It's because they have the ability to print gold if they want. Because when they make dollars, piece of paper, they can print that infinitely and then buy gold or buy silver. Or buy Bitcoin if they wanted to. But they're not doing that yet because governments are slow. They're like dinosaurs. They're like, we don't know what's the future. Probably Bitcoin will do it. I don't know. It's a difficult debate, isn't it? Like, will Bitcoin be a reserve? But I think it could be. I don't see any reason why not. Maybe when our generations, say 30 and below, people who are 30 years old and below, when they get older and everyone above us dies, okay? Because everyone's like, the Illuminati is still around. Well, it's probably not, because they're all dead. When I'm 50, there's not many people above me. When I'm 60, there's not many people above me. I don't think my generation are going to be as crazy as the prior. in terms of this like power struggle. So I think as we just get older, you know, I think we will just, if we accept Bitcoin today, then why won't we accept it tomorrow? So as, you know, as times change and people die and we get to 50, maybe it will be a reserve, but I don't know the time frame on that really. That's like macro shit we're talking right now, but yeah.
I don't think it'll happen. I think that's I think it's an idea, but I don't see it happening.
I think there's a good case for it, and I don't see any reason why not. But I would say that it won't be. Think about central bank money. Think about gold. That's like the reserve for governments. You know, they use gold as a reserve for the government. I think Bitcoin will kind of just be a more distributed reserve for the people. Do you know what I mean? It'll just be a different type of reserve, and it'll be more of a way people can use Bitcoin to sort of have some sort of narrative of real value, because it's the real stable coin is Bitcoin. There's only 21 million, so there's nothing stable. There's nothing stable about dollars. You can fucking print them and deflate them and do whatever you want, reverse repo, whatever. So like, there's no control.
I'm gonna zoom out our cameras because I keep getting connection complaints, and it's even worse when the camera is zoomed in.
Okay, yeah. So I'd say that, you know, I think Bitcoin's the reserve of the world, really, but that's the long-term narrative. That's why I buy Bitcoin long-term. We've gone through the trading stuff. You know, we look at this. I look at this as a tradable market. I was a trader first. I would look at this as a tradable market. I also look at this as a long-term investment market. So long-term, medium-term, short-term. So have a look what we're doing on the lower time frames right now. So there is a pretty decent wick there. If I have a look at all my momentum indicators, guys, I'll just quickly whiz through these. TTM squeeze, stochastic RSI. Let's have a look at the old normal RSI as well, relative strength. If we go on the monthly, guys, you can see here that, look, this is nothing like, this is good for the bulls, I'd say. You know, we're very, very oversold on most of these indicators. Look at the stochastic RSI is oversold, similar to when we went down to $3,000. So we went from 6 to 3. Here, went from 6 to 3K. It's a very similar situation we are now. Actually, I think we're lower than it right now, actually. And then we can go back in time and backtest that as well. RSI on the monthly is the lowest it's ever been on this chart. This is dating back to 2013. So monthly RSI is the lowest it has ever been, which is, again, pretty good for the bulls because we're getting very, very low. Flick down to the weekly. Again, weekly is good for, I would say monthly is obviously long-term because you only have 12 months in a year. I'd say weekly, you're looking at medium to long-term. So weekly oversold significantly again. RSI, again, more oversold than COVID. TTM squeeze isn't the best, but I would say that there's not many instances in history where you get a different color histogram. So we haven't got the histogram change yet. And then, guys, on the kind of like short to medium term, you're looking at daily. So you can actually see here that we're actually at resistance. The daily stochastic RSI is agreeing that this resistance zone here at around, we're looking at 21,600. Likely will probably play out a little bit further, continue these lower highs coming in, and actually we'll probably get some sort of retest of 20,000. And I think it will look like something like that. That'll be when we hit 20K. So, and then you can go obviously all the way down to the lower time frames, guys, and really get in there and start messing around with this. But yeah, that's kind of me just rattling on with some of my stuff I do every day, basically. Whenever
it's been a... Yeah. Go on.
I'll just say, I'll ask you the question. So for me, it's like I have this routine I go through on the charts, and it's like so ingrained into me now. It's like start with flat PA, fresh chart, horizontals, bang onto momentum. I actually have my own indicators I built as well, which help me with that. Look at momentum, flick to the longer short ratio. What's the participants and sellers? What's the liquidations? Look at the commitment of traders. I actually haven't checked that. I can't bring it up because I've only got one tab up. But I have this kind of like cycle I go through. It'd be interesting to know what your type of cycle is, man. What do you do?
Yeah, I'm exactly the same, man. You know, I do pretty much the same thing as what you just described. I always start in the same way with my, you know, just basic horizontal support resistance lines. This is what I live by and die by. After that, I mean, yeah, I'm just I'm throwing on my own indicators too. I like to keep it super simple. I have two that I've loved using for years. That'll be my beautiful Ichimoku cloud. Look at that. We've just failed support. Actually, we could still use this.
Your chart's not on right now, bro. Put your chart on the screen. We can't see your chart.
Shit. No, we just need to this. There we go.
I still can't see your chart on my end, but anyway.
Can you see it now?
My end, I can't see it, but maybe the guys in the chat. Can you tell us?
Sure. I'm pretty sure the viewers will see it. if I'm having technical, you should see it now, surely.
No, I can't see it. No chart. It's just a blue screen.
All right,
guys, technical problems.
It's just I think it's just my connection playing up. I need to go anyway. I need to be out in 9 minutes, so I'm gonna have to call it a stream there. You guys know the deal, though. If you did enjoy this one, if you want to see more of this kind of content with Max and I with a better connection from my side, sorry about that, guys. Should have tested this. We did test it actually, and it was totally fine, but it just went bad later on. Yeah, it got rugged. As it got licked as we went deeper into the stream. If you do want to see more like this, smash up those likes. Make sure you subscribe to both channels. Check out Max in the title. Check out my channel in the title of Max's
Yeah, guys,
stream.
on my channel as well. Do the same to Sammy. You know that yeah, I don't have a lot of people on my channel. Like, I only will ever have people on my channel I respect and think are good in the space. So if you guys go over to his channel, click the link in the title right now. Obviously, go and like his video, like my video. And then, yeah, you know, the more the merrier. And if we can, if you enjoyed this content, you took value from it, etc., all that kind of stuff, just hit that, you know, hit all the buttons you need to hit. You know, make that fucking button go blue, legis. And then we'll keep doing what we do. Hopefully, you took some value from it anyway. Yes, I'm gonna go, mate. You're a legend, Sammy. I'll speak to you soon, man.
You're a legend. Speak to you soon, mate. Yeah, let's do this more often. Let me hit you back when I know I've got a really good connection, and we'll do this again.
Yeah, man.
This was actually a lot smoother than I thought it would be, all things considered.
Well, yeah, you know, this is the first time we've done it, so it's going to get better. Like, it's always the first one we have fuck-ups, but it always gets better every day. So we move, we win.
We're building in the bear market, mate.
See you later, G's of Legends on the Flippers. Bye-bye.